Mhm.
Yeah.
Great.
Yes.
Okay. Well, again, we are thrilled to have with us today Henry Meadows. Henry Meadows is a CPA and a partner at his firm. I've had the privilege of working personally with Henry for probably over 20 years now. So it's been a while, and we're going to cover some of the basics today. And obviously, I'll just do a quick intro here on what we're going to try to walk through over the course of the 45-minute to 1 hour meeting, and then I'll introduce Henry, and then we'll kind of roll through it. It's informal, more of a workshop. So I guess let's start with a lot of times people, when they get into real estate, obviously it's relatively new, but the reality is that you are running your own business. And there's two ways to look at it. Are you running it like a part-time job, or are you actually treating it like it's a business that you actually own and operate, which you are doing? And if you're in this first box here where you don't really have a plan, you're just kind of taking leads as they come to you, and you're kind of making it up as you go. I know for my first 2 years in real estate, that was certainly me. I started off back in Remax, and I remember the first year I only did a rental in one deal. And by the second year, I was doing my third and fourth deal. And one of my coworkers said, "Hey, man, make sure you're paying your quarterlies." I'm like, well, what does that mean? I literally had no idea what he was talking about. So I don't know if you remember Henry, but his name was David Hagman. And he said, "You know what? I'm going to bring you into my accountant's office, introduce you. Don't make sure you don't get behind your taxes." So Henry's been a great guide ever since then. So with that said, I just want to turn it over to you, Henry. Just kind of introduce yourself, and we'll go ahead and head on from there.
Sure. Now you want me to talk about the proprietorship and the LLC, correct?
I think if we could maybe just chat very briefly about just as an agent and as a business owner, record keeping, just really broad strokes about what you do to help folks. And then from here, what we'll probably do is we'll get into the more complex stuff like the 401ks and all that near the end.
Okay.
So that way you can field questions. And I'll chat after maybe another 5 minutes about agents setting up their entities. And we can go some different options here.
Okay. Yeah, I've been working with Mike for 20 years or so, and we've represented him and watched him grow his business, and it's been a pleasure to see that. There, as realtors, you are in a business. There's no question. And most of your income is reported on a business schedule annually. And as hard as you work to achieve your income, you need to keep in mind that any expenses that you have against your income saves you about 55% off the top. 55% is made up of three components. One is your self-employment tax. And as a business owner, you pay both the employee share, as if you're working at a regular job, paying a W-2 job, and also the employer share. So that comes to 15.3%. Then your state rate, I use a state rate average of about 8% for Maryland. It's a little different for DC, and also for Virginia. But in general, I use an 8% rate. And then your federal rate can be as high as 35% or less, depending on your total income. So let's use 30%. So that gets you over 50%. 50% of your net income is going to be subject to that kind of a tax rate. So that's how important your expenses come in. And there's many expenses that you have in your business. The regular ones that you normally have, your MLS and your dues and that sort of thing. But unusual expenses are things like, possibly, depending on your circumstances, the office and home. And then one that is, I see neglected many times, is the business auto expense. And that's so common in your business that it's a very large deduction depending on how much you use your automobile in your business, which normally what I see is very significant.
Mm-hmm.
And again, that would depend on your individual circumstances. So what I want to do, I want to talk about the business car. And hopefully you guys haven't heard much about this in the past, because I know it's such a common expense of your business. But I'd like to talk about the mileage rate that you would use for business use of your car, and also some of the actual expenses that you can use if you don't use the mileage rate and the difference. Okay, the mileage rate for 2021 is 56 cents a mile. So every mile you drive your car, let's say you track your mileage beginning of 2020 and end of 2020 that you use your car, and you have a total mileage, and then you figure out what your business mileage is, and then you use that times 56 cents. If you use more than one car, then you add the mileage that you use for business, and obviously more than the one car, and then you use the mileage rate. That could be very large as far as a deduction if you have a number of miles that you use your car a year. What I normally tell the clients is if they go over an average of 20,000 to 25,000 miles a year in their automobile, the mileage rate is hard to beat if you keep your car for over 3 to 5 years. If you normally hold on to your vehicle more than that time frame, then the mileage rate, and it's been going down. It was 57.5 cents in 2020, and I think it was a little higher in 2019. So it's been going down, but it's still very significant. So you have to make these decisions when you use your car. Are you going to use it for many miles? And then the mileage rate would probably be your best alternative, depending on the vehicle, what its original cost was, its insurance, etc.
And Henry, can you mind just kind of chatting briefly about what the other alternative is instead of the miles? So a lot of people don't realize the difference. They think they can take both.
Okay, this is important. Even if you use the mileage rate, I like to track the actual expenses. Why? And we'll get to the actual expenses in a minute. But I want you to know the reason why. You can still use the mileage rate, but if you track your operating expenses, then when you sell the car, if you sell it for less than you've used it for depreciating amounts in your business, then you get a loss on the sale. And I would say in normal circumstances, 99% of the vehicles that are sold that have been used for business at the end when they're sold or traded have a loss. So someone that uses the mileage gets a new vehicle, uses the mileage, and again, mileage in your kind of business, you have use of your car, and you have really rack up the mileage. The mileage is a great thing, but you're shorting yourself when you don't track the actual expenses, because when you go to replace your car, you're going to have a tax break, and the tax break can be significant. Now, let me talk about the actual expenses. Actual expenses include licenses, gas, oil, tolls, insurance, parking fees, registration fees, repairs such as tires and that sort of thing. So you might, if you're going to use the mileage method, you might even estimate these things just so you could keep track of the operating costs of your vehicle. When you go to replace it, you get a tax break on the replacement. And then you get depreciation. And depreciation is a function of what kind of car you have. And let's say in general, there's two types of vehicles when it comes to the allowance of depreciation. One is a standard vehicle that whatever that means exactly, that is less than 6,000 pounds gross vehicle weight rating. And you buy either new or used, buy a new or used vehicle, and you can take first year depreciation of $18,100 if you use the bonus method, and most people do. And then the second year depreciation, 16,100, and then on and on and on. So, and on an average, if you get a $50,000 vehicle, you can depreciate that if you use the actual method over 5 years. So if you sell it in the third year, and let's say your depreciated balance is, let's say it's 25,000, my guess is a $50,000 vehicle in the third year will be worth 15,000 on an average. So when you sell it, you're walking away from a $10,000 tax deduction if all you're doing is using mileage and going about your business. That's how important tracking the actual is versus the mileage when you go to trade or sell your vehicle. Now, the second type of vehicle is a large vehicle that's over 6,000 pounds gross vehicle weight rating. And in that case, there's no limit on the depreciation. You can use 100% of the car purchase as a write-off the first year, new or used, and that's a big deal. The problem with that, and let me use this as an example, when you do that, when you buy a luxury SUV or a very large Suburban or whatever you have, you do that and you expense $60,000 the first year, and you go on your way and you're very happy. Well, the second year you don't get anything other than the actual expense of operation, insurance, repairs, etc. And third year, fourth year, fifth year. Well, and you say, what about the mileage? You can't, if you use the actual in that case, you walk away from the mileage method. So that's why it's important to understand in your particular circumstance, an average of miles that you drive your vehicle for business in a year. And I can tell you if it's over 25,000 miles, and if you have a modest car of $50,000 or less in value, then the mileage is going to be the way to go if you hold that car for 3 years or longer. That's what the studies show in general. But every circumstance is their own.
Do you have to take the 100% the first year on that large vehicle?
No, you do not. You can, but you do not have to. Yeah, that's important to note. There's also something called a 179 expense. The 179 expense isn't as important as it used to be because of this term bonus depreciation. Bonus depreciation is almost replacing, in certain circumstances, the 179. But 179 is still an option on a car purchase if you use the actual method. So I would say in general, I see someone, what we had a client, she's moved on, and she, she's in your business, but in a different type of business. She appraises homes. She was driving over 45,000 miles a year in her car, all over the Eastern Shore, up and down, up through Baltimore, down to Richmond, day in and day out driving her car. And she said, "Oh, I'm going to get a one of these high-end SUVs." And I said, "No, you're not going to use bonus or 179. You're going to use the mileage method, because she goes over 45,000 miles in a year. She lives in her car." So there's an example, and that when we tracked it out for her, because when she bought the car, she was told she would get the whole thing as a deduction, which is a great thing. but I showed her, and she bought it at the very end of the year, of course. So, but when I sat down with her and showed her how many years of mileage method she used, and then what if she had used this car 3+ years, going for only 40,000 miles a year, she was walking away from about an $8,000 to $9,000 deduction annually over 3 to 4 years. I showed her that using the mileage method, and then she finally said, okay, she understood. So that's why you have to look at it in your particular circumstance. You have to look at, you know, your routine. Everybody's routine is different, and then gauge what you decide to do for a very significant cost of your business, your automobile. That's how important it is.
Henry, just to piggyback on that, I've just put up on the slide some of the other common stuff that just came to mind. Obviously, you guys know these are all business expenses. I think the car is going to be by far the most significant, and it even gets there's a craft to it. I remember Henry when I was trading in a car. I can't remember exactly what I was doing. To be honest with you, he's like, no. There's an exact sequence how you want to do it. Don't do a trade-in. And so you actually told me exactly how to do it. And he's like, you're going to add another $3,000 worth of a write-off there. So keep all your records. And if you have someone doing your taxes, great. If not, reach out to Henry. But there is a timing to all this. But guys, obviously, you know, running your own real estate business, being an agent, it's hard work. You know, paying taxes is horrible. But, you know, I remember I watched a seminar one time, maybe 15 years ago, and I think it was a tax attorney. And I think he said something to the effect of the U.S. tax code is 70,000 pages, of which 2,000 are actually saying what you have to pay in taxes. The rest are all exceptions or write-offs or anything else. So that's why it's nice to have a professional to know those other, you know, X thousand pages of exceptions for us. So take advantage of it. Obviously, all of your marketing costs, keep records of all that. As far as, Henry, I did have a question on the mileage. For tracking the miles, is there anything you'd recommend for them? I know there's some apps and things like that I play around with a little bit for tracking the miles.
The biggest thing I suggest is track what your odometer is at the beginning of the year, and then obviously at the end of the year, or the beginning of the next year. And then based on your calendar, and the IRS allows you to do this if you have a routine with your business, and might not be the case with you guys, then you can use a 3-month history of your routine, and any exceptions of that, you went on a long trip to a seminar or you know, something of that nature, then you document the differences, and you come up with, based on your calendar, your business miles for the year. So in your guys' cases, I'd almost look at it, your mileage monthly, and then based on your calendar, your houses that you're working and that sort of thing, then come up with a monthly amount that you're using your car for business, and the IRS would be fine with that. We've had that a few times when the IRS has looked at this sort of situation.
Great.
The days of having to track your mileage every time you get in your car, I mean, it depends on the business, but in your business, an agent isn't going to ask you that. They're going to ask you to give some sort of a record of how you track your business mileage, and something reasonable is acceptable.
Okay, great.
I saw Chen's comment in the chat. You can even just have a notebook in your car, you know, stick it in that side pocket in the door, and just make a note of where you're going on different days, and you can figure out the actual mileage later, but at least you have a record of where you're going that's business related.
Mm-hmm.
Yeah, and I think one thing that's important too is obviously throughout the year, keeping track of all of your expenses, all your receipts. You know, it's easy to save that stuff online now too. I know one thing that was a big help for me is once I actually started getting established in the business after, you know, the 3rd or 4th year, really getting on top of the quarterlies for your taxes. We've got quite a few agents now that in the last 12 months have almost doubled their business. So I'm really stressing to them, make sure that you are staying on top of your taxes. And so they're, you know, it's easy to get ahead of yourself and use that money to reinvest in your business. But one thing I love is Henry, when he prepares my returns each year, I get for the next year, all of my quarterly envelopes are in there for Maryland, for IRS, the dates on them, how much has to go. So that's a big help for me. All I have to do is just write the check and put a stamp on it. So we just make sure you understand, if your business is really starting to ramp up, we're happy to chat with you about that or reach out to Henry, because it's easy to get stuck behind where next thing you know, you're like, well, I need to have a strong February and March so I can make sure I can write my checks in April. That's very, very stressful. I guess, Henry, are there anything new that we should be aware of because of COVID? As far as guidelines, I know Hogan's rolling out a couple of proposals the next couple of days.
Well, there's been a lot, because of that, there's been a lot of changes. Maryland, this came out January the 9th. If any of you have not paid a quarterly for Maryland, you don't have to until April 15th. Hogan, I don't know what he's doing. He just out of the blue, he came out and said, Maryland dipped into their rainy day fund, and they were about revenue neutral, extending the tax season last year till July. So we're in good shape as a state. So you don't have to make your quarterly estimate for Maryland tax until April 15th instead of January 15th. So that's something new that just came out, 11 days ago. And these sort of things are happening with COVID like I've never seen before in my career. I mean, changes that happen once every other week, a couple times a month, maybe every other month as far as little tax changes. Another thing that happened because of COVID is this establishment of a retirement plan. If you didn't get a chance to do that in 2020, there's a way now to establish it after the fact, certain retirement plans, all the way until you file your return. They've extended that time. There's been a number of things for business. The biggest thing is, if any of the audience filed and received a PPP loan, those are not taxable, and they don't net against expenses. That came out towards the end of 2020. That's a big thing for anybody that's done that. Mm-hmm. And then, of course, no one, your business is specifically listed in the regulations to be able to take advantage of the 199A deduction, which is whatever your net income is from your business times 20%, whatever that number is, that's a tax deduction. And you don't have to write a check for it, only federal, and you get it as a straight line deduction on your personal return. But you have to make sure you list that you are a 199A candidate. You don't want to miss that when you file your return. I don't know if that'll go away for this year. We'll see. We'll see what Biden does. I don't think he's going to do anything this year, my personal opinion, mm-hmm. because of the way things are and the way we need to get back to to regularity. So mm-hmm. We'll see what he does, though.
Okay.
Yeah, that's the biggest changes, Mike, that come out recently.
Fantastic. I want to segue now over to something that comes up often is agents receiving commissions to a business entity. We get the question quite often, and I want to make sure we're very clear about what we're talking about today. This is not for liability protection or anything like that. We just want to let you know that agents do have the ability to have their real estate commissions paid to them as a sole proprietorship or as an LLC. You're welcome to do that. The Real Estate Commission does have a provision in the Brokers Act to allow you to do that. But again, I want to be very clear. It's not for agents to put on their business cards. You don't want to put, Rick Johnson LLC Real Estate Services, and then somewhere on the back is our name buried under the logo or something. So that's not what we're talking about here. This is strictly for accounting and tax purposes. There's some other things you can do with it, and we're going to do very, very broad strokes today. The idea is if you want to set up your own personal sole proprietorship or LLC, we can pay your real estate commissions to that entity. So there's a couple of caveats there. One is we typically like to only see one member in that entity. So it can't be you as an agent and then your brother and then 3 contractors. So you guys form this LLC together. We can't pay a commission to that entity. If you're the only member and obviously your license is in good standing, then yes, we can pay a commission to that entity. If there is any other people in the entity, they need to be also licensed agents, and they need to be with our company. So it can't be yourself and then someone else who's with Remax. So those are the kind of stipulations there from our end. Other than that, it's very easy to do. Back in the day, you'd have to spend $800, $1,000 to have an attorney file the stuff for you. Now you can file everything on the state of Maryland's website. It's all online. You're looking at probably $200 in total cost. So again, this is not something to set up to save money or give yourself liability protection. I think it's a smart way to structure your business, especially as I mentioned earlier, for those agents whose business is really starting to ramp up. There's a lot of stuff you can take advantage of from a tax perspective. It also keeps things clean. That way you've got a separate entity, separate bank account, your real estate commissions go in there. And again, you don't need to do this. You can set up a separate personal, checking account and just keep the money separately, which I really think you should be doing anyways.
I would suggest a separate credit card too.
Exactly. Yeah, you can have a debit card even attached to that account, and you use that debit card to pay your MLS dues, pay anything for the office, pay G-Car, I don't know how Henry feels about that. I guess, but does gas in the car, has that been removed from the equation now?
No, what was that?
As far as, putting gas in your car, is that no longer part of the equation if you're going with the mileage route?
Yeah. Oh yeah, absolutely.
Okay. So again, what we're talking about here is setting up a separate entity where your commissions go. We would need to see the paperwork that you'll get as far as how to set that up. This is just a screenshot from the Maryland SDATS website. This is where you want to go if you want to explore this as an option. Again, it's not something where you set up ABC Realty Inc. and then you start marketing that out there. This is just something to set up more for accounting purposes. And it also opens up the door for you, which we're going to talk about next, for some retirement planning and some other really interesting stuff you can do. So the website link is on the bottom to get to this page. If you're looking at exploring this, I would go in on that left-hand side there. You'll see business entity search. The easiest way is what I did, is just set up an entity, just my name. But you're welcome to do whatever you want to do. But that's the first stop, is just to check your name availability, see what's in there. And then there's an actual process. So Henry, we can chat about this, whether or not you need an actual EIN, which is an employer identification number. I guess, Chris, you had mentioned on the 401ks, I guess you don't necessarily have to have the EIN to do that.
That's what I was told. I guess it would depend on whoever's setting it up, what their requirements are. But yeah, as long as you are, filing Schedule C as a sole proprietor, then I think you can still do that solo 401k.
Okay. So we'll get there. We'll get to that next. I wanted to just kind of touch base on that. But if you're looking to do this, again, go into the SDATS website, check to see if your name's available. You can reserve the name. My understanding is you can't set up a bank account without the EIN number. I'm not sure if that's totally correct, but the idea is if you have a separate entity, a separate bank account where we would send your commissions, and then you can fund some of this other stuff that we're going to chat about next. So that's more of a Henry question on the employer identification number, but if you do need it, these are the steps that Maryland has on their website. It's important to follow these steps so you're not getting the EIN first and then going to Maryland and finding out the name isn't available. So just follow these steps here. Again, we'll be sending out a video of this so you can see these links. But again, all this came from that website link down below. So we're going back to that prior slide. So Henry, if you could, you want to chat a little bit about the 401ks and what?
Sure, absolutely. Normally it's called a solo 401k for a self-employed person. And a self-employed person can have employees. So, but in general, that when they, yeah, there it is. They came out with this, this provision, oh, I don't know, maybe about 9 years ago. And because sole proprietors couldn't do what a regular salaried employee could do and put away a very large amount of their own earnings. And so that's why they came out with this provision for self-employed. So what does it mean? What it means is, and I really like this a lot, you have up and down years, and let's say you have a year where you're only net $20,000. Well, you can put all of it away into a 401k plan. Now, and let's say you have a great year. Well, you can put $19,500 away, and if you're over 50, you can do about $6,500 more, and then 20 to 25% of whatever the net income is. So how much can that end up being? It can end up being as much as $63,000. It's for a self-employed person, that can be a huge benefit. But what I like mainly about it is the fact that if you have a smaller income one year, you can put a very large amount of the small income away. That's what I like about it a lot. When they first came out, the solo 401k was not so good because of the administrative costs. I think at the time it was about $1,500 to $1,800 a year. Now I've heard of them being $500, $425. So the administrative costs have come way down. So which is a good thing. But I really like them for a business person that has up and down years, and they want to continue to contribute to their retirement plan. I think it's such a great thing for self-employed people in that kind of situation.
And Henry, can you chat a little bit about the tax side of things? So what happens, so an agent has a commission, they have it paid into their entity or into their business account. And so, when would they contribute, and when is that money taxed? Okay.
So let's say you've had a good year and you want to contribute $25,000 into your 401k account. Well, normally you would do that by tax time, April 15th. And you contribute by then and you go on your way. And that would be a deduction on your federal return and state return. And then you go on your way. Now, if you extended your return, that extends the timing of the contribution. And I really like this for self-employed people. And let me tell you why that's important. You've had a good year and you're contemplating making a fairly large 401k contribution. And then you say, okay, I have my first quarter for federal and state, your quarterly tax payment due April 15th. And I also have to make my pension contribution. Well, if you extended the time, and let's say, depending on your particular business, you normally heat up towards the summer and fall. Well, I'm going to tell you, extend your return, then we're contemplating that you're going to do this much into your pension, and then that drives down your first quarter and your second quarter payment. So by extending the time, you've driven down what you have to come up with April 15th for your first quarter and second quarter, and obviously your current year's liability. So it's all, to me, it's all a good thing. I'd say half the self-employed returns we extend just for that one reason, because they want to extend the time to fund and they want to lower their current year's tax and then their first and second quarter. Very important. And when you see what those numbers are, you say, why, boy, I need to extend my return, because why am I going to pay an extra quarterly payment, an extra provision on my current year's tax, when all I have to do is extend my return, and then I extend the timing of the contribution. That's how important it is.
And this money goes in pre-tax, is that correct?
Yes, you get a tax deduction, federal to state, and another good thing about the 401k, you can borrow, unlike other pension plans. I won't mention the other types. Let's say an IRA. An IRA you can't borrow, but a 401k plan you can borrow from, and you have to repay it over time. But it's a good avenue to have. And I don't know. I'd say I'm gonna give a rough guess. I've talked to maybe about 15 self-employed people this past 2020 year, and about borrowing from their self-employed 401ks because of COVID. If you didn't have that, it'd be less of an avenue that you could go to make ends meet with this crazy time. So that's another reason the 401k is such a good avenue compared to an IRA or another type of pension. The ability to borrow, very important.
And I'm not sure if you guys are aware of it too, but you can also use it to buy a home as far as a portion for your down payment.
Mm-hmm. Right.
You know, I have a solo 401k, and it was great for me because previously, I don't know if the laws on this have changed, but I had an IRA, but because my husband had a retirement plan at his work, I couldn't get any deduction from my contribution. So I'd be sending a few $1,000s to my IRA every year, but not getting any tax benefit. So I opened up the solo 401k, rolled all those non-deductible contributions in there, and I got a great benefit. And now I have a 401k that I can actually contribute to. So instead of sending money to the IRS at the end of the year, I send it to my 401k.
Great.
Why pay them when you can pay yourself?
Yeah.
Exactly.
It's some of this may seem confusing if it's new to you, but there's some fantastic benefits to take advantage of out there for sure. So basically, again, I wanted to just kind of I want to leave enough time at the end for questions. But in a nutshell, again, you know, just make sure you're keeping good records. Treat your business like a business. You should have a business plan. You should have a marketing plan, and you should have a financial plan for what you're going to do in 2021. So we wanted to hit this up front so that people can get structured properly. We do get a lot of questions about the LLCs. So we want to be clear. This is just strictly to really keep your accounting a little cleaner, but also open up some doors here for some of this other stuff. We're happy to pay the commissions to those entities. We just need to see the paperwork from Maryland. Again, we really only want to see one person in that entity. And the entity's sole purpose is for the receipt of commissions. And if you saw that slide from earlier, the Real Estate Commission, the law actually says it's not to provide brokerage services. But again, I think it's a good idea. It's relatively inexpensive. Henry, if you could speak real quickly. I know that when I set this up, guys, I have the same thing. I'm not going to present anything that I haven't done myself. And I'm set up as a sole proprietorship for my real estate commissions. Henry, would you say there's any benefit or pro or con for the sole proprietorship versus the LLC for the purposes of these commissions?
The LLC gives you the avenue to go a few steps further if you want. The sole proprietorship, it's great. It's a great business tax type. Very flexible, depending on your particular industry's requirements as far as records and that sort of thing. But in general, it's very flexible. I like sole proprietors. Now, the LLC gives you the avenue once you establish that to go a little further if you wish down the line. You don't have to, go further into what? Into potentially an S corporation. And I wouldn't advise that until you really look at all the ramifications of your particular situation. But that starts the process for going further. And normally, I see that many businesses start out as a sole proprietor, go to an LLC, and then go to another tax form, either a S corp or a corporation, maybe a partnership. So that's the next step in a progression of more sophisticated tax types.
Yeah, remember that's exactly what you advised us to do. We started out back in '96 or whatever as an LLC, and you said, hey, once you reach this particular benchmark, you might want to consider an S corp because it opens up these doors for you. So that's why it's important too to have a financial partner that really knows what they're doing. And again, I can't speak highly enough about Henry, and he actually referred us to the law firm, to Mort Fowler and Shulman Rogers, who we used for 15 years. So it's not just someone to do your taxes; it really is a financial partner for you. So you know, I wouldn't hesitate if you have any questions, reach out to Henry about any of this stuff. I just want to open up now if you guys have any questions for him. You know, anything super detailed, I'm sure he'll be happy to chat with you offline. But you know, I'll turn the floor over to you guys and have at it. So, any questions? Dave, I know you have a question.
I'm trying to stay silent. It's a New Year's resolution. I got a few jokes.
No.
Henry, maybe,
I mean, there are questions I have, but it would have to be to him directly. It's technical stuff.
Sure.
So I'm just curious about. Well, I did have one. When you said if you delay till September, you don't have to file that year's first 2 quarters because you're delaying the year prior.
No, what you're doing, you're making your quarterly estimate. If you contribute, let's say, more than what you normally do to your pension, you're lowering your estimated tax responsibility. You're lowering that, whatever that is, and your current year's tax obligation, but just by extending your return. And
by extending your return, you don't have to even do the first 2 quarters.
No, you still have to do them. You still have to do them.
You still have to do them.
Yeah.
But you anticipate.
You're trying to lower the overall tax for the current year and then the next year by increasing what you normally would do to your pension or even doing a pension.
Okay, so you have to sort of anticipate what you're going to contribute.
Now, let's say I'm going to do 25,000 into my pension, and then you only do 20, and you pay tax on that basis. Then you just owe the rest of the tax, making a decision change when you file your return.
Okay. So you anticipate it. If you don't do it, you owe it.
Yeah.
And the IRS is okay with you anticipating wrong.
That they are, yes.
Because you're supposed to pay, you know, if you're going to delay it, I delay it every year because my accountant said he's never had an audit with people that do it in September. He feels they audit more.
Yeah, I've heard that before. You wait, and then the computer systems now, I don't think it matters as much. When they used to process them by hand, I think he's right. I don't think it matters as much anymore. But maybe he's right. I don't know.
But you're supposed to pretty much have it all done, and if there is an adjustment, there's no extra fee or
no.
Yeah, Henry, I don't know if this is true, but I had always heard, you know, one of the benefits of having the separate bank account, the separate credit card and everything is just for convenience. It makes it so much easier on you to figure out your estimates and get your tax, you know, all your tax information is already together. But I had also heard that, God forbid you do have an audit, your odds of doing better are much better because your records are separate entirely.
No question. Yes.
So I hope you don't have an audit, but at least that's a good defense.
Mm-hmm. No, there's no question about that.
Did anybody have any other questions while we're wrapping it up here? So we're happy to pass Henry's information along. If you have any questions for him, if you want to have a sit down, and if you have any questions about setting up those entities, I would just go take a look at those links from Maryland SDAT, or give us a call at the office. We're happy to walk you through it. It's a pretty easy process, but we're anticipating a really strong year, just based on as a branch we sold. I don't want to say it was about 730 properties last year,
Wow.
which, again, in the middle of COVID, that's just shocking. So I'm really proud of the work everybody did, and it was a tough year to say the least. So we're not out of it yet, but just the momentum we're seeing, and it looks like we're going to see interest rates will be low for a little bit longer, but should be a strong year. So make sure you get out in front of it financially, and anything we can do to support your guys' business.
What is that based on, that interest rates will be for a little longer?
That's my personal view.
That?
I think new
For a little, is
administration
it the
spends a
whole
lot of
year?
money.
Because I'm thinking of building a house to sell, but
Okay.
I'm debating it with this guy, the builder, because a year from now is another market. That's how
Yes.
long it takes to build. You have any inside information?
I'm going to tell you exactly what the market's going to look like next year, Dave. No, I'm kidding. I wish. No,
But does
honestly,
it feel like it's going to stay in the twos?
I don't know about that. Again, it depends on the bond market. And so, I think there's going to be a lot of money spent this year, but the bottom line is that there's still no inventory out there. And I get that kind of question. How would you compare now to like the financial crisis? And you look back then, there was so much speculation going on. It wasn't a shortage of houses. It's just everybody on this call would be moving every 2 years, because of what was happening with the pricing. Now there's just no inventory, and that's not going to change. The population's still growing. I can't see anything. I can't see rates spiking, but I know me personally, I am gonna. I'll be reaching out to Henry a little earlier than usual this year, because I do want to get my returns done so I can go ahead and get refied. I got an email from a lender saying that their higher ups who handle their pricing and the actual the lines they get from Wall Street, they're anticipating some moves later in the year. So they're advising their loan officers to start, this may be the low rate point for the market. So I'm going to certainly get refied for sure. But I think it's with the vaccine and stuff, it seems like people will start to put more houses on the market. Mm-hmm. I think we'll get more inventory. I think there'll be more buyers that have been leery, that they wanted to buy, but they weren't comfortable going out and doing showings. So I think it's going to be a really strong year. So just, that's why we're trying to push all this stuff up front, is to get everybody geared up, so that by the time the springtime gets here, everybody's got their ducks in a row. So, take advantage of it. But for sure, you have no idea what next year's market's going to look like. So take the best of what we got here. So. But I want to thank everybody. First and foremost, Henry, I want to thank you for your time today. We really appreciate it.
Anybody has any questions, just let me know.
Okay. And we'll send out an email with Henry's contact information again in a video of this. So if you have any follow-up questions, email them in, and we'll do our best to answer them.